The additional cash inflow section is where you enter a variety of different income sources, such as a part-time job, selling a business, rental income, selling real estate, or a future inheritance. Cash inflows that you enter here will first be used for any expenses you have in the future. If the inflows are not needed for expenses, they will flow into your taxable accounts proportionally based on their balances at that time. For the cash inflows, you control the amounts, when the inflow begins, when it ends, how often it occurs, the growth rate, and the tax rate. For example, I have a part-time job that starts when Jane is 67. It will last for 10 years. It will also grow at the inflation rate and will be taxed at the default income tax rates. This couple will also receive an inheritance in the future. Notice that the tax rate on the inheritance is 0%, because unless there's an estate tax on it, inheritance money is not taxed unless it's a traditional retirement account. This couple is also going to sell a business at John's retirement. The tax rate entered is the federal capital gains tax rate plus their state tax rate. This is also the section where you want to add the sale of a home, and there are some things to keep in mind with this. First, the cost basis portion is not taxable. Also, if this is your primary home, you will get an exclusion, which is currently $250,000 if single and $500,000 if married. For a home sale, you want to add two line items. Add the non-taxable portion, which includes the cost basis and the exclusion, if there is an exclusion. Then add the taxable portion. I added these here. Note that neither of these grow with the inflation rate. The non-taxable portion in this example is a cost basis of $300,000 plus the $500,000 exclusion for a married couple. The house is projected to sell for $900,000 in 10 years, so the taxable portion is $100,000. Notice again how the growth rate is 0% for the taxable portion. I entered it this way because I projected what the sale price will be in the future, which makes it much easier to separate out the non-taxable from the taxable portion. I also entered the projected federal capital gains tax rate plus the state income tax rate for the sale. As with many sections in Wealth Trace, you can drag and drop any row to change the order.